Good afternoon. One question we've heard from several clients this past week is, if inflation and oil prices are moving higher again, why does the market continue to push upward? This week was another reminder that markets often react to expectations just as much as current conditions. Earlier in the week, technology stocks led the rally after NVIDIA received approval to resume selling certain chips to Chinese companies, which investors viewed as a positive sign for global demand and easing trade tensions. President Trump also announced that China is expected to purchase 200 Boeing jets and increase purchases of U.S. oil, further fueling optimism around U.S.-China economic relations. However, by Friday, markets pulled back modestly as traders took profits in many of the technology names that had rallied sharply earlier in the week. At the same time, Treasury yields moved higher, with the 30-year Treasury rising above 5.1%, its highest since 2025, reflecting concerns that inflation pressures may still be lingering beneath the surface. Oil prices also moved higher following reports of increased Chinese purchases of U.S. energy. Despite these developments, technology and growth stocks continue to lead the broader market higher. One reason is that investors still believe oil prices could moderate over time, rather than continue rising indefinitely. More importantly, economic fundamentals and corporate earnings have remained relatively resilient, giving investors confidence that businesses can continue growing even in a higher rate environment. As we look ahead, markets will continue watching inflation data, Treasury yields, and signals from the Federal Reserve closely. Investors are trying to determine whether inflation is stabilizing or beginning to re-accelerate, which could influence the timing of future rate decisions. As always, if you have questions about how current market conditions may impact your financial plan, don't hesitate to reach out. Thank you and have a great week.